Being here with us today. I'm head of market structure and technology research at Coalition Greenwich, and I'm really excited today to be here with Amanda Hindlian, president of ICE Fixed Income and Data Services. I normally would say thanks for being with us, but I should say thanks for having me.
You are very welcome. Thank you for interviewing me. I'm looking forward to the discussion today. And you're right, we're here at the New York Stock Exchange, so thank you for coming to us.
Yes, very cool venue. We're very excited to be here. So we're going to just jump right in. So you started as an analyst at Goldman. You spent 20 years there at Goldman, ultimately becoming a partner, which is amazing and no small feat. So congratulations for that. And then you joined ICE in 2021. So can you tell us a little bit about that career progression, how you found yourself here, and sort of what that evolution was like?
Sure. I'll start at the beginning, and if it's too long, cut me off. But I joined Goldman as an equity research analyst. So I started covering semiconductor capital equipment companies, and that gave me a great foundation in capital markets and really understanding how equity markets function and how equity valuations are driven. Mm-hmm. And over time, I also got a really good understanding of technology by being in the semiconductor space. And so a couple years into that, I also started to cover semiconductor companies, so sort of moving up the supply chain on the semiconductor side.
Right.
Then I held a bunch of really different sort of managerial roles inside of the firm, but I never stopped publishing. So I always wanted to write and do research on sort of major trends or themes that we as a firm at Goldman at the time saw that were relevant in the market. So,
I can relate to that.
I know. And so I read your work and I love it and I value it because I know that the effort that goes into creating that type of proprietary work and analysis. And so for a period of time, I did a lot of work helping the firm Goldman respond to new rules and regulations following the financial crisis.
Interesting.
Eventually, that led me into a job in the executive office where I worked with the firm's then president and COO and co-president. And in that capacity, I really kind of oversaw a lot of client interactions across many of the firm's different businesses, as well as senior level engagement. Eventually, as you said, I made partner and I moved into the global investment research business where I was the chief operating officer of that business and also the president of the firm's think tank called the Global Markets Institute.
Yeah, that must have been fun, surrounded by such smart people and by digging into these big issues.
Oh, no question. I mean, Goldman has this amazing culture of, really talented, really dedicated individuals. And I had a phenomenal team. And we were really able to tackle issues that were top of mind, whether it was from a sustainable finance perspective, a gender equity perspective, thinking through corporate strategy, a whole range of different topics we were able to cover from that seat. And we had the benefit of being able to do it for all of the firm's different types of clients, which was nice as well, because we didn't get so siloed into we're only looking at a private wealth client or we're only looking at a banking client. We really got to do it across the board. And then as it relates to ICE, I was drawn to actually the New York Stock Exchange. My first role here was as the global head of capital markets. And that business is responsible for driving new listings. So especially in 2021, when you think about the market environment,
big year.
Huge. There was so much activity. And so I got to join right at the start of the year and really drive through that environment. It was wild. It was fun. But we were working through the venture capital ecosystem, the private equity ecosystem, really understanding companies early in their lifespan to help them decide what the right path to public would look like. And we were looking at a lot of SPACs. We were looking at a lot of traditional IPOs, direct listings. So it was very busy. Obviously, in 2022, some of the things that happened in the fixed income market, which we'll get to, slowed down new issuance on the equity side, but it was nevertheless a very, very exciting environment. And the pipeline here is still quite rich. So eventually we do expect companies to start to tap the public markets again on the equity side.
Yeah, it's absolutely coming back. And so good segue. So ICE is a fascinating company, so much more diverse, I think, than a lot of people understand. Obviously, we're here at NYSE, we know that. There's the futures business. Obviously, we're going to talk about the fixed income business. There's mortgages. how does all of that work together? Like, how do all those businesses interrelate and help each other?
So it's a great question. I mean, the fundamental strategy that Jeff Sprecher, our chairman, founder, and CEO, has always pursued is one of really trying to take any kind of a marketplace that looks analog and transform it into one that's more digital. And in the process, really try to create greater efficiencies, greater transparency, better technological solutions that help markets function more efficiently. And so when we think about where ICE is today, we really have three primary businesses. The first is what we call our exchanges segment, and that's where the New York Stock Exchange sits, as well as our clearinghouses and our futures exchanges. The middle pillar is the one I oversee, which is our fixed income and data business.
Okay.
And in that middle pillar, what we have is our bond trading platforms, which we will definitely talk a little bit more about. We also have a large data business where we do everything from evaluated fixed income prices to reference data to derivatives and more. We are also an index benchmark provider, and that sits under this silo as well. And we have a connectivity and a desktops business, both of which have been good growth areas for us. So we do quite a bit here.
Yes.
And then the third silo is a little bit newer for us, although not brand new, which is the mortgage piece you referenced. So I haven't been with ICE as long as others, but I do know that one of our first forays into the mortgage business was actually through MERS, which is the Mortgage Electronic Recording System.
Right.
We purchased that. And then over time, we continued to build out our competency in the mortgage business with the purchase of Ellie Mae and the integration of that. And so what we're trying to do in the mortgage business, what we've done in markets, right, which is make the mortgage application process easier, faster, more transparent by leveraging our tech stack and, again, creating those greater efficiencies and transparency. So if you've taken out a mortgage, if you've refinanced a mortgage lately, you may not have seen us on the front end, but our technology was likely enabling some portion of that process for you on the back end.
Yes, thank you. My recent refi was much better than my original mortgage, so thank you for that.
We'll take all the credit. I don't know if that's fair, but we will.
Totally, go for it. So let's get into fixed income more specifically. Obviously, you started to allude to last year was a crazy year. We'll see what 2023 brings.
Yeah.
Your earnings report and just conversations I've had suggest obviously ICE had a great year. There was a tremendous amount of retail bond buying, particularly in the fourth quarter, munis, corporates, really just an incredible year for the bond market despite the market going down. So can you talk a little bit about what that's been like for you in this seat and sort of how that's impacted both your trading and your data businesses?
Sure, absolutely. I mean, I think we all know that last year was unprecedented in terms of the number of rate hikes and the cadence between the rate hikes, but importantly also the degree of hikes that we saw from the Federal Reserve. And the type of volatility that comes off the back of those movements from the Federal Reserve are net beneficial to us from a trading perspective. So we certainly benefited from tailwinds there as a business, but I think that's a piece of the story and not the whole story. We also made investments over numerous years to really try to leverage our strength, our core strength in munis, and in particular with the retail community in the muni space. And so that's, ICE TMC bonds. We saw a tremendous amount of activity there, and we've essentially made our trading platforms technologically better, more able to respond to different types of queries. We're also able to execute trades at either odd lot sizes or block sizes. So we offer a wide variety of types of execution as well. So we benefited from that as well. And the net result for us was that business essentially doubled in revenue in 2022.
Amazing.
Yeah, and it was, years of work went into that. So it wasn't like it happened overnight, but certainly market volatility benefited us. But we had done a lot of work behind the scenes to also take advantage of exactly the trend you're talking about, which was getting that retail flow and that muni flow back up.
Yeah, I mean, just the pure number of trades executed on average last year was up, I believe, over 40% from the year before. Absolutely, just an incredible year.
Yeah, and again, so what's interesting is this year, there are lots of debates in the market about exactly what inflation will do, exactly how the Fed is going to have to respond to it. Certainly, we've been looking at the prints as closely as anybody else. I don't anticipate that we'll see as much market volatility this year, but I still feel really strongly about the net benefit to us of the investments we've made in our trading platforms, and that they'll continue to perform very well, even though I expect volatility on the fixed income side to come down.
That makes sense, right? But yields are going to remain where they are, which is much more attractive than they've been in a decade or more.
Right, and think about it. So we started talking about the fact that, I began in the equity business in 2021 when rates were at essentially zero or negative in real terms in many parts of the world, and equity markets were booming. And, what you saw last year was the beginning of the return of yield in the fixed income markets, and that drove a boom in the fixed income market. So maybe I'm lucky, but I keep finding myself in spots where the markets are definitely moving, and it definitely prevents me from ever getting too bored.
Yeah, I'm sure. So there's been a lot of talk about the quote equitization of fixed income markets. I'm not always sure I agree with that characterization, but from your perspective, right, you're driving one of the major platforms, you send data to effectively almost every market participant. So do you feel like that characterization makes sense, or do you look at it in a different way?
I think of it slightly differently too, because from the bigger picture perspective, any single issuer could have one CUSIP for their equity,
right,
and have 1,000 bond CUSIPs, and may also have all other types of fixed income instruments or structured products on top of that. And so the idea that markets in the fixed income sphere will become more electronified, that underpins that equity idea,
right,
I think is very true. And it's part of the reason why we're in the business. We do believe fixed income markets will become more electronic, and they have over time. We've seen an increase in electronic workflow in the fixed income markets, but equity markets are very different. They're very transparent, and they price almost instantaneously. Fixed income markets are just inherently far more complex. So while I think the underlying trend is there towards electronification, people ask us all the time, why is it taking it so long, right?
Sure.
We thought we were going to get electronification immediately following the financial crisis, when the post-crisis rules made it really expensive from a balance sheet perspective for banks to continue to do dealer-to-dealer trading in this space. Well, it's taken longer than one might have thought, in part because of what you and I are saying, which is that the fixed income markets they're not one market. They're actually quite complex.
For sure. And yeah, and it's taken that decade or more for the technology to catch up, for new protocols to sort of be discovered, for traders to adopt them.
And I'm sure you see this because I've read your research. I mean, you guys talk quite a bit about where you've seen growing electronification versus not.
Yeah, no, absolutely. I mean, really, the chart is staggering, right? From 10 years ago, when high yield bonds, for instance, virtually did not trade electronically, and now a third of the market trades electronically by notional. It really has been an amazing transformation.
Agreed.
So from your time talking to clients, you mentioned the desktop business, obviously the data, the trading venues. What does the front office need? Like, what are the tools that it seems like they need to sort of be more efficient in the marketplace? And then how are you guys trying to answer that?
So that's a really good question. We historically, from our data business's perspective, have had a greater presence in the middle and back office at our clients. However, we're growing in the front office, and we're growing fairly aggressively in the front office. And one of the reasons why is because as we go out and talk to clients, which, as you can imagine, we do all the time, day in and day out, what we hear very consistently from them is that this old problem people had of, how do I get data? How do I ensure that I have enough data? How do I ensure that the data is actually capturing everything I needed to capture? That question has shifted. And now what we hear more from clients, and in particular front office clients, is, I have so much data, I don't know how to ingest it. And I don't know necessarily how to take away the noise to really find the underlying signals that the data are trying to point me towards.
Right.
And so what we are working through very carefully with our clients is understanding, for each different type of fixed income market, and again, they're very different. So every type of fixed income market is going to have a different type of trading,
Sure,
a different level of electronification. RFQs versus auctions. I mean, we can, keep going down that list, right? We hear them saying to us, actually, we just need you to help us make sense of all of the information around us to make us better, smarter, more efficient in the decision-making processes that we have.
Yeah, and so one of the interesting, I know you guys have worked on ESG data. We did some research in the fourth quarter looking at fixed income use of ESG data. I find it fascinating, right, is there's a sort of an opinion portion of ESG investing, what you believe in and where you want to put your money, but from a portfolio manager's perspective, right, it's how does something like climate change actually impact the risk of your investment, right? And sort of, isn't that, so I think you guys have data to help PMs work through those questions, yeah?
Yeah, absolutely. So, our data expertise also does expand into the sustainable finance world. And we have really interesting, I think, very differentiated technology that allows us to do highly detailed geospatial mapping. In the US right now, it's a product that we're expanding globally, first in EMEA and then in other parts of the world this year. Wow. But essentially, we can go down to the level of an individual street address and tell a client, any type of client, how we can see different types of risks.
Wow.
And how those risks could potentially affect the value of that individual property. And that's relevant, obviously, for a municipality that's thinking about issuance and muni buyers, but it's also relevant to insurance companies, real estate companies. I mean, you could sort of keep going down the spectrum. Homeowners care. If I were about to purchase a property and somebody could tell me with great efficiency and accuracy that the probability that my property is under sea level in the next 10 years is really high, I would probably want to know that.
And should I buy flood insurance or not? Is it worth it?
And should that be reflected in the value of the home price? Right. Now, in the future, how accurate is that information? So we have really, really great sustainable finance data there, but we also have other forms of sustainable finance data, whether it's at the reference data level for individual securities or it's climate transition risk. We're looking at a lot of different areas there. And certainly it's something that our clients talk to us about regularly.
Right.
And it's a trend that I think some of us have thought, is it staying? Is it going? Is it going to grow more? Is it going to cease? I haven't seen it stop.
Yeah, it seems like it will grow, no doubt. And so I'd be remiss not to ask, there's been so much talk about artificial intelligence in the press and just over coffee, right, over the last couple of months. Is there an AI component to analyzing all of this incredible data that you've just been talking us through?
Oh, absolutely. I mean, we leverage AI very regularly, and much of our evaluation pricing has an AI layer that sits over it. We still keep humans in the process the same way we do on the trading floor because the human brain does matter. Certainly, I've read the warnings from the likes of Mark Cuban and others about the fear of the machine sort of taking over. I myself have registered as a consumer for ChatGPT, and I'm still on the waiting list, so it just keeps popping up as something that I can't access yet. I would love to see it in its purest form and play with it myself, but I haven't been able to yet. Nevertheless, ICE is really closely involved in all of those initiatives, so we work to really understand all of the emerging technologies that may impact any part of our business, and we look at them across our businesses. Yeah. And AI is definitely one of those areas.
Yeah, that's very cool. There definitely seems like there's a lot of opportunity, if we even just talking about fixed income specifically, but yeah, we've barely scratched the surface.
Yeah, and I mean, I worry about it as a parent for my kids. I don't want my kids being able to copy and paste text that they got down from ChatGPT on a basic school question on the one hand. On the other hand, I think if the basic information is pretty easy to get, perhaps it forces our children, for example, to think a little bit more hard about what they might say that's different.
Sure, yeah. Can we dig a level deeper, right? We didn't all have the internet to the level they do now as kids, and so everybody adapts.
I don't want to date myself, but I didn't have the internet. So, and I didn't have a cell phone, so there was no Googling of anything back in the day.
We had to go to the library.
Exactly.
Excellent. And so the data business, so we should just the last little bits on the data business. So the last thing we didn't really talk about is the index business, which is quite big. I know I look at the MOVE index all the time, but there's more to it than that.
Absolutely. So we have a significant index business. I would anticipate that by the end of this year, we've got about 500 billion and more benchmarked from an AUM perspective against passive ETFs that are affiliated with our own benchmarks. So we have a very strong presence in the fixed income index space already, which is also growing, and we see fixed income ETF presence growing as well in general. We are expanding our index business into the equity space a little bit more proactively than we have in the past.
Interesting.
As well as into the thematic space. We've done some of it already, but we're doing more. And we're finding really interesting outcomes there. So sustainability is a good example, right? There are plenty of our clients who are interested in sustainability indices as an example, but we do a lot more that's thematic as well. So near and dear to my heart, given where I started, we have a semi index that's quite popular. Cool. We have a series of indices that people look to on a regular basis to guide them. The Move is definitely one of our popular indices. Now, that's a market where what we hear from our clients today is they're really heavily seeking differentiation. Mm-hmm. For them, they're trying to ensure that they have a moat around their ETF businesses and that they can sustain their competitive advantage there. And we're trying to do our best, and we are helping them in the back end ensure that we can provide them with the types of benchmarking that enable them to reach that level of differentiation that they feel is so net beneficial.
Well, that's a good point. I think a lot of people, when they think indexes, you think about, tradable indexes that you follow in an ETF or a mutual fund, but there's a benchmarking component as well that's more institutional, right?
Yeah.
Okay, yeah, because that differentiation, I think, is sometimes sort of lost on how big really that index, with the use of those indexes and how far they go.
It is, and people also, I don't think people understand necessarily how complicated it is to create a good index, but then how complicated it is to maintain one, right? Which is the rebalancing effects and how frequently they have to occur depending on whether it's an equity index or a fixed income index, and the evaluations that go into it, which is one of our data specialties.
Right.
So when it comes to thinking about what is the right benchmarking level for any individual security, one of our advantages from an index perspective is the fact that independently we provide pricing on those securities that is more accurate than what many of our competitors can provide.
Great, and I guess that goes back to what we just talked about, the AI, the evaluators, the dive there.
Technology is key. I mean, there's no element of our business that doesn't in some way, shape, or form rely on the integration of our technology stack, our data center, and our connectivity business, the delivery mechanisms we leverage to ensure that our clients can access data in any form that they want, whether it's a GUI or any other type of form of interaction or delivery mechanism. We're able to provide them with many different options. So and AI, as you said, is another element there. So almost every element of our business is very heavily reliant on evolution and technology.
Sure. So am I right in assuming you have a trading business that feeds into a data business, that feeds into an index business, and around it goes, right? And all those businesses were brought into ICE by acquisition, but it sounds like it's very much so integrated, and they're all sort of connected to each other now, and that's why the whole works as well as it does.
Yeah, I mean, they're integrated, and we are able to cross-sell very well, and that's one of the definite underpinnings of ICE. I would say there are guardrails in place, though, because every single business is subjected to its own forms of regulation. So if you think about the New York Stock Exchange being SEC regulated, or you think about our pricing and reference data business, which is registered as an independent investment advisor, or our index business, which is regulated under the IOSCO principles, or the UK BMR, each business, while it interacts with the others and there is a virtuous cycle, does have some elements to them that also keep them disparate from a regulatory perspective.
Oh, I see. Yeah, so appropriate walls and sort of sharing where you can.
Exactly. So we do a lot of cross-selling, a lot of sharing, a lot of leveraging across the firm in a really impressive way. And, ICE is one of those organizations that still in many ways feels like a startup.
Right.
And so we're nimble, we're quick, we expect to move radically in response to our clients' problems as quickly as we possibly can. And that's something that is so fundamental to our mindset. We've been able to make all of those markets work really well together without crossing any of those guardrails that are so important.
I guess the last question on the fixed income business. So we're obviously sitting here in New York, but I suspect this is a very global business, right? That you have data and other services around the world as well.
We do. It's a great question. We tend to have a larger presence in North America than we do in other parts of the world, but we have a growing presence in Europe and we have a growing presence in Asia. And in fact, probably our incremental growth will come more disproportionately from those regions than from the US in the next 5 years, would be my guess. Although there's still quite a bit of room to grow in the US.
Sure. Yeah, no, there is, as we talked about the last half hour, there's so much opportunity still to expand this market.
So much. And, you and I live in exciting times. So we'll see what other technology and evolutions come that will make this acceleration process maybe even speed up.
For sure. So last question. So we'll have to do our little bit of 2023. How do we think things will go this year? It feels like, sure, things are going to be bumpy. We don't know what's going to come, but it seems like we're sort of coming out the other end of COVID and inflation, and so I'm optimistic. What are you thinking for this year?
I'm optimistic too, which I find myself somewhat surprised to say, because normally my inherent trend is to be a little pessimistic and wait and see. But I think that what we've seen in the markets in the last couple of weeks is what I've kind of thought of from a macro perspective as points in time or data or information that we've had to get through to get to the other side of what the Federal Reserve needs to do. So in other words, when we see more people going back into the labor force, I think, okay, that had to happen, or you were never going to get to the other side of inflation. When we see that the number of open job positions relative to people looking for work, that ratio shrink, I think, well, that had to happen. When we see inflation tick down a little bit, even if it doesn't come down as much as we might have hoped or as fast as we might have hoped, you can see that the inflationary data are coming down. And you can see that some of the more stubborn areas feel like they're a little COVID related as well. So some of that demand that you see in travel, as an example,
Sure.
That's really robust, airfare. I mean, that's many people being willing to pay a premium just to leave their homes after many years of feeling very trapped. So I too feel optimistic. Now, I'm not going to get into the business of forecasting exactly what the Fed will do when. I am sure they will have to hike rates more in the coming year. I'm not one of those people who thinks they're going to hike, and then all of a sudden drop rates towards the end of the year. I don't see that. But I do think that the pace will be slower, the pace will be more moderate, and the actions that the Federal Reserve is taking are starting to make their way through the economy. So I feel optimistic about the year. I certainly feel optimistic about our business. And I certainly feel incredibly optimistic about our business if the macro environment also helps us.
That tailwind wouldn't hurt. Well, Amanda, this was awesome. Thank you so much for taking all the time today.
My pleasure. Thank you so much for having me.
Great.
I enjoyed it.
Yeah, and thanks everybody for being with us. I really appreciate you taking the time. If you have any questions, please reach out to us. And hopefully we will see you again next time. Thanks so much.